I think Jill presented me in a better light than I ever could hope to be. I'm not closet in the sense I was secretly studying while I was doing accountancy exam. I was studying to do a PhD, even not in accountancy. And having spent too much time on part-time job, etc., I didn't finish PhD in reasonable time, so I abandoned. And I thought some occupation that I could carry on, and that accountancy was one of the possible options. But anyway, good afternoon. My name is Iwaski, Head of Corporate Governance at ICAEW. I'd like to talk about what we call new challenges in corporate governance. This morning we heard from Catherine as to the FRC's Corporate Governance Code and related proposals to revise the code and FRC's other projects. And Paul presented a bigger picture of corporate governance and related issues. The subject I'm going to talk about is probably a bit more lighter touch, in the sense I'm not going to talk about a very technical content, and it's not even very much geared towards imparting information that is completely new to you. What I'll be talking about is something quite common, ordinary sense. The word corporate governance is used today, so there was a bit of discussion during the panel session. The word corporate governance is used everywhere, almost, too frequently used. So I will come back to that, but firstly, I will talk about the structure of my presentation. Firstly, I will talk about why my employer, or the Institute of Chartered Accountants, is involved in the area of corporate governance. Then I will talk about changes that has taken place in the area of corporate governance, more sort of commonly accepted corporate governance framework level. Then I will talk about recent controversies surrounding governance or related issues. And then I will talk about our responses, which are formulated in the form of 5 questions. And finally, I will share our thoughts as to where we go from there. So the first slide, ICAEW on corporate governance. Institute has, I refer to ICAEW often as Institute, but anyway, Institute hosted the Cadbury Committee 20 years ago, provided venue and provided some sort of secretarial function. And since then, we have made input into the development of the Corporate Governance Code. And most prominently, we have provided substantial input into the development of internal controls guidance, which materialized in the form of Turnbull guidance later on, and currently being consulted as part of Corporate Governance Code and related guidance as explained during the Catherine's presentation. Furthermore, many accountants do contribute to the information flow in the marketplace as they carry out their function as finance-related experts, and also others become auditors, again providing credibility to the financial information. And many qualified members leave the accountancy practice and go into business. In fact, over 50% of our members are in business and they are not in accountancy practice. So that shows our sort of background constituency in terms of why we are involved in this area. And then finally, we do thought leadership work. In the past, we have compared the corporate governance practice in the US and the UK and compare the differences in terms of the way of thinking, the terms and regulation used, etc. But that was about 5-6 years ago. Today, we do fairly different things. And we are looking at corporate governance in a more sort of wider context, so to say. So what sort of changes has taken place in the area of corporate governance? Corporate governance in the sense that a study or sort of related theories focusing on the role of board or its interaction with shareholders or shareholder interaction with ultimate beneficiaries and the company's internal functioning, etc. That's the corporate governance I'm referring to in this context. But there has been a quite significant impact from the financial crisis. The financial crisis focused on the role of board. Obviously, having good corporate governance doesn't prevent financial crisis to take place. And organizations do fail, with or without good governance. Business strategy may be wrong. Management may have occasionally made a mistake. There may have been very unfortunate market conditions. A company may not necessarily deal with such situations. However, the financial crisis did focus on the public attention to the internal aspects of companies and considered what was management doing, what were the boards doing. And there were many issues identified. And I don't think we can ignore that. Secondly, there has been many changes in the capital markets. There was some talk about, well, references to shareholders during the morning. I think it's very difficult to refer to shareholders as a single group today. The composition of shareholders have changed very much. And many amongst you who are experts in this area know that so-called UK institutional shareholders has decreased in proportion from about over 30% to today, just over 10%. About 13%, I think, is fair numbers. And over or about half of share register shows main listed companies' shareholders are overseas shareholders. That may include sovereign funds, but also major institutional investors, but from overseas. And their interests in how the company is doing or companies' interaction with the national economy is different. And again, we need to recognize that when we talk about corporate governance in a wider context as to how it interacts with, say, the economic success of a country as a whole, because corporate governance is often mentioned within that context. And then finally, international harmonization. Again, a couple of references were made during the morning presentation, but there is generally pressure for all countries to raise the standard of corporate practice, partly because there were some major incidents that were highlighted in media, but also in order for countries to obtain certain funding from bodies such as World Bank or invite overseas investments, it is important to have good governance, because before investors make investment decisions, they will look at how companies are run. And because of that reason, there is a pressure for countries' governments to intervene in the process, or take part in the process to raise that standard. So there has been international harmonization, and as Paul said, there is a tendency to look at what is considered to be a successful example, and that will be replicated. But obviously, we need to consider how it would effectively work in different contexts. So those are the kind of major international level impacts in the area, international and national impacts in this area. More recently, in particular since the last 6 to 7 years, since 2007-8 financial crisis, we have seen many reference to corporate governance, and that's one of the things I was thinking this morning. The term corporate governance has been mentioned in all these circumstances, during the bank bailouts, in the sense, generally people talked about banks operating recklessly and failing, and implicitly expecting the governments to intervene to bail out failing institutions because of their importance to the national economy and so on. And that led to a big outcry amongst the people. And we thought it's something we should take a bit more seriously. Of course, bank bailout is not just about corporate governance issue. It is a wider issue, more complicated subjects and elements are involved. But governance was one aspect that people criticized, and we need to be aware of that. Executive remuneration, I don't think I need to talk much about it after this morning's extensive discussion about this subject. And as we noted, there's an aspect of relative remuneration issue in comparison with others. Does it look normal? But also in comparison with absolute term, in the sense, if you ask somebody who is standing next to you at the bus stop and you talk about salary figure of, say, somebody very highly paid at the bank, it doesn't matter how many people. And the people would say, well, I think it's very high. And it's actually very high. But we almost don't know what it means because it's so different from our reality. And I think that kind of fueled the debate, ongoing debate in this area, and attention. Again, we need to think about what gets people to talk about executive remuneration subject within the context of governance, because there must be something which makes people to be justified to talk about remuneration as if it's their own, as if our own issue. And that's, I think, is related to culture, but we might talk about that during the panel discussion later on. Short-termism has been criticized very much in terms of corporate behaviors or investor behavior. We note that there is a clear policy direction that long-term is good thing, short-term bad thing. But we need to also remember that there is no legal requirement for companies to be long-term. We generally think it's a good thing for companies to have long-term business objectives. That's not law. That's not required. There's no requirement for companies to exist for the next 20 years. But we think it's a good thing. Why? And if investors encourage different types of behavior, we think that's bad. Why? Aggressive tax avoidance, there has been lots of discussion as to this one too. Again, corporates are behaving within the legal conditions, but when their tax planning were considered to be aggressive, again, people found that unacceptable. And furthermore, corporates responded to that criticism and in some cases voluntarily decided to make a donation, or in other cases decided to reflect into their future tax planning. Why? And again, I think it's indicating the importance of cultural or even ethical elements that we recognize in the debate of corporate governance. And then finally, board composition and effectiveness. That one sounds more standard corporate governance topic, but takes a diversity issue. Again, we are obviously talking about what makes board more effective and robust and so on. But also, there's a slightly different element there. When we look at the society where equality and, say, opportunities and so on has been discussed, and we see the board's membership, and we recognize that they look fairly homogeneous, and we think it's not quite right. And we thought it's important to take note of the fact that we somehow think that's not quite right. It doesn't mean that we know clear analysis and logic as to why it's wrong and what's the remedy and so on and so forth. But the recognition to recognize that there's something not quite right. That sort of gut feeling is important to take notes and reflect in our further thinking. So that's the initial motive for us to do some work in corporate governance area. So Institute response to these challenges in the area of corporate governance is to recognize wider context. So departing from relationship between boards, corporates, management and shareholders, we decided to look at wider context, so society, economy, relationship with government, international relationship, etc. We try to identify underlying assumptions and disagreements. I think, again, during the Paul's discussion, and I think to an extent Catherine's discussion, talked about our general assumption as to the role of shareholders in terms of bringing discipline into the market. But we are assuming that, based on the idea, because shareholders have provided capital, they would act. But would that involvement reflect in enhancing good corporate governance as we see it? Those two things are not necessarily the same. And identifying similar sort of assumption in the process we consider to be important one. And then we think from there we can recognize gaps that exist between the existing corporate governance framework and reality as we see it. So we have come up with 5 questions that we called new challenges. Big questions. What should companies be responsible for? What are the overarching principles of corporate governance? When is comply explain the right approach? How diverse should boards be? And who should be covered by codes? I think many things were kind of referenced in the morning discussion as well. And why we came up with these questions, we have a small committee of about 18 people. I don't know if it's so small, which is made up of people from business, some shareholders, people from accountancy practice. Some of them are accountants, some of them aren't. Some academic people. And we thought, what are in our minds when we talk about governance? And we decided to deliberately leave corporate governance, existing corporate governance framework and study. Just take it more common level. When we see corporate governance mentioned in the newspaper, FT or BBC website or The Economist, in what sort of context do we see it? And what sort of questions do we actually see underneath the debate? And those are the things we came up with. And we decided to explore those and then present our tentative answers to them. Not an easy task, because if we start to look into existing theories and studies, these are ginormous subjects individually, and some of them debates are ongoing, so it's difficult to come to a conclusion. But we decided to deliberately come up with simple solution, presented in as simple language as possible, and as short as possible. So we have responded to these 4 questions at the cycle of about 3 to 4 months pace, and each paper is about 3 to 4 pages. We decided not to sort of publish in the print format. We just publish online and encourage people to read and post comments. Have we been successful in terms of this approach? It depends, and we talked about measurement a lot this morning. So it is up to you to make judgment. But we've decided, since we take the format of online publication, we can monitor how many people are looking at the web page, because we actually publish the entire paper on the web page, and how many minutes people spend, and where do they go from there. We can actually find which country they are coming from, and the trend, say, when we talked about it in a newsletter, had the number of people who looked at it increase and so on. And we can filter people who have repeatedly visited. We can't tell how many people have used Google Translate to translate the entire paper. But I know one of the paper had about time spent about half an hour. So I think that is indicative that it might be read in somewhere, or somebody opened the document and forgot to close the screen down. Somebody may have had the computer screen open all day. So that kind of things obviously distort. So we don't necessarily take numbers to that extent seriously, but we use as reference and monitor the level of interest. The first paper was published in April last year, second July. The third one was about December, and the diversity paper was in April. And the first paper had been opened or read by about 2,000 people, and then second paper about the same. Third paper is a bit lower, but it has very sustained level of interest. And diversity paper, obviously because it's very topical, lots of people looked at it in the very early stage, and we received lots of comments. We tweet about the publication, and there are lots of retweets and stuff like that. So we can see what is happening in terms of the nature of interest and type of interest. The first paper, just briefly about what we talk about in each paper. The first paper talk about a quite fundamental, big subject: what should companies be responsible for? And in the area of corporate governance, sometimes it is taken as a given question. Well, answer is already given. Companies deliver shareholders long-term interest, and that's it. We have taken slightly different starting point from that. We thought, okay, if companies deliver long-term interest, then return to shareholders will be maximized in the long term anyway. So let's not talk about it as a primarily responsibility of companies. That is something legal requirement that would happen in any case. Let's talk about it as to, in the sense that what would make companies successful over a long period of time. And quite boldly, we set out 4 elements. We talk about business purpose. So whatever the business is, to have a clear business purpose is fundamental. So if you are a retail bank, to safeguard the money deposited by savers and add value and return. As simple as that. And I think issues happen when that money that was supposed to be safely safeguarded by the bank actually has been spent for investment type of activities, and then that went wrong, and the money is lost, and the government intervenes and bail out. And people would question, why? That's not the reason why I deposited my money. So isn't there a problem? So that's the motivation of first responsibility, which we called as business purpose. The second one, we talked about behaving in a socially acceptable way. We don't mean by doing good things as a business. So we don't necessarily mean that is a business that benefits the environment. It's more to do with to do business in a way that is considered to be normal in a given society. So observing observing what is acceptable in a society in terms of labor practice, or considered to be what is good. So open culture within the organization, for example, or executive teams accessible to the organization, being sort of open to new ideas, being able to pick up risks and opportunities promptly because it has flat or effective communication within the organization. Those things are good, but they are sort of the opposite behavior that becomes almost unacceptable. And we think balance should be struck somewhere to the extent that is conforming with what is acceptable within the society. This is a quite challenging concept because depending on a time and place where we live, what is socially acceptable might change, and it's not stable concept. But we think it's nevertheless important, because take an example of tax avoidance. Again, companies were acting within the legal limits, but when certain activities are considered to be unacceptable, that led to criticism, and that has impact on companies' reputation. And that does not benefit businesses in a context where there are many businesses that are competing and people can change where they want to invest. And then finally, we talked about law and compliance with law and regulations, and being accountable. So companies responsive to what they do. So those are the things we talked about in the first paper. In the second paper, we talked about very fundamental principles that we believe underlying a bit longer document, which is now a corporate governance code. So we talked about companies having clear leadership, the board members have good capability and accountability, consider business existence in a sustainable basis, and board has integrity to be responsive to external criticism or internal criticism indeed, as main principles. And then in the third paper, we talked about the effectiveness of comply-explain regime. It is a kind of golden concept in the UK context, and we do endorse that in the sense comply-explain is a good system. Without heavy-handed regulatory mechanism, people would follow the ideas, principles that are required, which everybody complies, and only in terms of how you do it, which is set out in provisions, you may take different routes, but still, nevertheless, achieving the same principles. So it works when there's a shared idea as to what is good governance, but if there isn't, it's not going to work. And not just ideas, but also it requires institutional frameworks such as Relevant Companies Act that guarantees the rights of shareholders exists, and there are mechanisms for the information from companies to be disseminated to wider audience exist. So in both institutional settings and shared ideas on corporate governance, when those things exist, comply-explain work. Otherwise, it probably won't. And if it doesn't, what do you need? Different mechanism to make the system work. And then finally, the paper on diversity, we decided to deliberately depart from the discussion of quota or what sort of diversity needs to be reflected. We started from what makes board effective, and we thought in order for boards to be effective, you need to have robust discussion. And what makes robust discussion possible? To have people who have different ideas or background, and boardroom which is chaired by hosted by the chair, who encourage everybody in the board to express viewpoints. Amongst the boardroom, there's mutual respect for different opinions, and they would debate, but at the same time, when a final decision is made, everyone supports. And I think that resonates in the discussion about co-op, where all the board members were representing particular constituencies, rather than to support a decision that is reached within the boardroom. So in a way, we have approached the subject of diversity from quite different viewpoints, that diversity may differ within each body, depending on what the company wants to achieve and its business development stage and so on and so forth. The last paper on who should be covered by codes, because the paper hasn't been published, so I can't talk very much about it, but the motivation is, I think Robin mentioned this at during the panel session, but should codes be differentiated to different people, or one document, would that suffice? I think the paper's starting point is, where would it go if code were to be produced to different bodies? and what is the positive effect, what could be the negative consequences, and what could be our response to that. So it's quite a difficult paper. That's why we still haven't published it, but we were hoping to do something. Probably won't be July, so probably September. So, as I said, we have published 4 papers, and we have hosted different discussions sometimes at university. There was mention about materials used at the university by Paul. I've spoken at universities as well, and some universities, they've used it to write an essay and competition of the essays and so on. So it's quite interesting because these are quite fundamental subjects, and you can approach without having extensive knowledge about how corporates work and company law and so on. But in a context where corporate governance is talked by a broad range of people, I think it's okay to approach the subject in a very common sense sort of starting point. Once we get into the discussion, it might end up in fairly technical level. However, starting point could be fairly down to earth, and experience shared may be anecdotal. And what we are hoping to do is to summarize all the inputs and interesting viewpoints received during the process, and then probably we would even issue short paper. If we have spent 2-3 pages on each subject, I don't think we can extensively discuss each findings, so probably 1 page each or something like that. But that's what we are hoping to do. So further information, all papers are available from that website, ICAEW.com, New Challenges. I don't encourage people to leave a particular paper's page and leave it open, because that distorts the figure ridiculously. But otherwise, yes, you can find all this paper either in PDF or you can read them online. So that's it.
Thank you very much.
Thank you.